Alright, so if you want to be more profitable in the futures markets, then you need to listen to me. I've got a really simple strategy that's got about an 80% win rate for me. Over the past few years, I've got about 100k of payouts over the past year or so as well on Apex and various other prop firms. Been having a great time with this strategy, and I don't have to sit on the charts for like millions of hours a day, just setting alerts and waiting for my levels to be hit. So I'm going to show you how to do it. So let's get into it. I'm not going to waste any time. So all I do is I'll come onto the charts. Say, for example, this is your price action. All I'll do at the start of the day, and I do this every single time, and I post this in my private Discord where you can get alerts and signals for my trades, so make sure you go in there. I'll just go in there, and every day I'll just mark out the obvious swing lows like this on like the 5 minute or something. And then very simply, I'll just be waiting for my level, one of my levels to be hit. I'll set an alert here, for example, at all these levels, and I'll wait for them to get hit like this. I'm going to write down all the steps of my strategy so that you can see this. So what I'm looking for is, I'm looking for, firstly, a major sweep. This is absolutely guaranteed, quintessential. I won't take a trade unless I get a major sweep of a level that I think is a good major level with good liquidity below it like this. And then what I'm looking for is a bullish reaction. And I'm also looking for momentum back to the upside. So when you come down, you want your sweep, and then you want to see a really bullish reaction like this and good momentum back to the upside. You want to see the candles doing this, like really, you know, really starting to push back up, not just like slowly trickling back up, because you'll probably just end up doing this. So this is what I want to see. I want to see the major sweep. I want to see the bullish reaction. I want to see good momentum back to the upside, and preferably you want to be on higher time frames. The 5 minute for me is the best one, the highest win rate. The higher the time frame, the higher the win rate in my experience, just because it has more price action baked into it, I guess, which means that the reversal is more likely to happen. So we've got our major sweep, we've got our bullish reaction, and we've got momentum like this. Then what I'm looking for my entry model is an inverted fair value gap, which are all the rage at the minute, but they really do work. And I actually went through a little bit of a teething process myself where I thought these don't really work, but when you combine them with good sweeps of liquidity and reversals with good V-shapes, you are going to be getting yourself some good results. So what I'm looking for is, I'm looking for an inverted fair value gap, and primarily I'm looking for 3 candle pattern V-shapes, which are absolutely the best reversals in the market, and I won't let anyone else tell me otherwise. What you're looking for, so say for example this is this low here, we've come down, we've swept through the liquidity. If I can actually draw a straight line, it's almost there, almost, there we go. So, and then say for example this is your liquidity, so we've come down through this level like this, and then you're looking for your bullish reaction, and the best ones that you can get are these 3 candle pattern V shapes, which are like this. They come all the way back up through the gap that you've just created with the liquidity sweep included. You've got momentum, you've got your major sweep, you've got your bullish reaction, you've got momentum, you've got your inverted fair value gap. As you can see, there is a fair value gap here. If you don't know what a fair value gap is, it's just a 3 candle pattern like this, where you have one candle, you have another candle that comes down with momentum like this, and then another candle comes down without rebalancing this gap in the market here, which creates a imbalance that you can exploit for a reversal. As you can see here, in this instance, you get your 3 candle pattern V shape. So you come down, you form the gap, and then bang, in one candle you come and inverse that gap with the sweep. And this is the model that I use for looking for entries. This is absolutely the highest probability thing that I found in the market over the past 5 years of trading. And I've traded a lot of strategies, so this is what I'm looking for. And then, very simply, I will enter. Once we inverse this gap, we've got liquidity sweep, we've got a really good momentum back to the upside. If it's on the 5 minute, we've got even more high probability chance of it working out. I trade about 30 accounts copy traded on Apex, Lucid, MMFU, some other ones. I can't remember the other ones. But I'm adding more and more accounts all the time. But I'll basically risk about $200 per account per trade. So I will size my trade for about halfway between this low and the gap. And then if we come down after inversing this and close back below this gap, I'll close the trade for a loss and consider myself wrong. It does happen. There's no one that's got a 100% win rate. If they're telling you that, they are definitely lying. as you can see, even with an 80% win rate, you do sometimes get losses. But you can see here, basically, we've come back down. If we come back down like this, I will close the trade for a loss. Completely lost my train of thought. So, for my entry model, very, very simple. We enter on the inversion of this gap with the sweep. We've got the major sweep, the bullish reaction, the momentum. We've got the inverted fair value gap, or the IVG. 3 candle pattern V shapes are the best. They don't have to be, but in my experience, they are the best. And then what we're looking for is, I'm targeting a 1R for my first scale. What I do is I will take half my position off at 1R and then go break even on the rest. This is a little bit different to some other people who will just go break even at the internal swing high. I've found that more often than not, I'll get break even and miss the move about 8 out of 10 times if I do that. So I prefer to take the loss occasionally and actually stay in the trade for a 1R. Usually if you hit the 1R, you'll either get price action, do this, and you'll go and hit 2, 3, 4, 5R on the rest of the trade, or you'll hit 1R and then you'll reject out of like a 5 or a 15-minute gap that's been formed above. Generally speaking, this is what I've experienced. So I like to take half my position off at 1R, put some profits in the bank, and then just let the rest of it play out. And then obviously if it's at break even, you can get break even on the rest, or I'll just target liquidity back up. I'll target liquidity on the opposite side with runners going back up, and that's my strategy. It's really not that complicated. I'm going to show you some examples because it may seem complicated, but really it's not. So let me show you the best example that we've had recently, which was this 1 minute on Friday. What we're looking at here, Wednesday was a bit of a mess, wasn't it? Didn't we have one on Tuesday? New day opening gap there. The 1 minute. I'll just show you the one on Friday because this was the best one. So you can see here, we've just been kind of going sideways, chopping sideways. We're coming into open. We've obviously got CPI, which pumps us up, and then we've created some really, really obvious areas of liquidity up here. We've got this data high, which is a really obvious area that I would always try and target in terms of liquidity on the opposite side. When you have a news event and you create a wick like this and you don't sweep it, there's going to be tons and tons of stop losses up there that you can go and target. But look at this. I have just completely... Did I just delete my thing without copying it? I swear that I just copied that. Anyway, I'll go through it for you. So, what have we got here? And I'm going to type it all out again because I've lost it. We've got a major sweep. You can see the major sweep there. I've marked it out. Major sweep of liquidity. What we're looking for next? We're looking for a bullish reaction, which we've got in abundance. We're looking for momentum. This candle is about almost 100 points. You're probably never going to see as much momentum as that. That is insanely good momentum. Definitely would sell me on a trade. We've got the inverted fair value gap. I will mark that for you here. So we've got ourselves an inverted fair value gap here that we can trade. There is also a gap down here, but you can see we just inversed all of it instantly. Got our inverted fair value gap. And this wasn't a 3 candle pattern V shape, as you can see. It was a 4 candle pattern, but still good enough. 3, 4 candle pattern V shape. You're not always going to get perfect setups, but the momentum was the main component for me that really sold this trade. If you look at this, you can see we've got a really, really incredible... Let me put this over here so you can see it. You're behind me, I've just realised. This momentum really sold me on this trade. So what do I do then? I enter, targeting a 1-for-1. Targeting a 1R. And then I'm leaving runners for liquidity. Now, this was a funny one because it happened so fast that I actually entered here on the inversion. As you can see, I was in about two micros or so on this because I'm risking $200 per trade. This all happened so fast that I didn't actually have time to scale at 1R. And I ended up scaling most of my position at 2R here. And I just trailed my stop up to this high. And because I'm risking about $200, made about 400-ish, maybe 450 on this trade. But you could see this had all the components I was looking for. Major sweep, bullish reaction, massive momentum. If you've got more than like 30, 40, 50 points of momentum on a candle, that is insane momentum, and it's going to increase your win rate significantly, especially after the sweep. And then if you've got a gap that you can take as an inverse, I'm entering here, I'm targeting 1R. Ended up getting around 2R on this because it just happened so fast. But you can see absolutely banger trade. Really, really good stuff. I'm going to show you one more example. The one that I always show because it's the one that, basically the best example that I've seen for ages in the markets and something that you want to be looking for every single time. This happened a few weeks ago. This was one of the best trades I've ever taken, literally in my entire trading career. So this was me on this Monday morning. I'm from the UK if you can't tell. So I wake up at London Open pretty much 8 o'clock in the morning. Like you would wake up at 8 o'clock in the morning for New York Open in the US. So you can see this is what I woke up to. We've ground ourselves to the upside. We've actually closed this new week opening gap. We're moving up bullish. We've got obvious levels of liquidity. Immediately I'm looking and thinking, I'm marking out my swing lows. This one is obvious. This one here. This area here. And then I've just gone, yeah, these are the obvious swing lows. So I set alerts at these and I was waiting. I was doing something else and then one of my alerts triggered. London Open happens. We come down. We sweep this liquidity here. And then look at this. This is what you want to be seeing. Let's get this back up. We've got a major sweep here. After, this bullish. We've come down into this area here. Major sweep. Look at this really bullish reaction. And then on the next candle, on the 5-minute, beautiful, beautiful momentum back to the upside here, as you can see. This was a good 20-point candle, which was nice. Closed back over the gap in a 3-candle pattern V shape there. Was going to take this all day long. Entered on the inversion here, risking about $200 per trade. There's about 4 micros on this trade, I believe, for about a $200 stop loss on the low. Targeting a 1-for-1, which is here. And then after about 20 minutes, we hit my 1-for-1. Lovely stuff, as you can see. So I take half off $100. Go break even on the rest. So I'm now break even with $100 profit in the bag. We get a little bit of sideways, sideways, sideways. And then going into the next macro, we get another pump where I trail my stop on another micro in profit. So I've got 1 micro here at break even and 1 micro trailed at about, what is this, a 3-to-1? As you can see here. We come down and I get stopped in profit on that for like $150, $200. So I'm up $300. I've got 1 more micro trailing here in another $100, $150 of profit or so. And I'm basically looking to target this high up here. The high I was looking to target was this one, which we come up, if you look here, and eventually hit during New York Open. And we actually just smacked through all of this. And I saw that we had this really obvious liquidity here. You can see how obvious this trend line is. I mean, this was never not getting ran, in my opinion. Trend lines like this get ran so often in NQ markets. It's crazy. So I basically trailed my last one up for like $200 or $300 profit. Made about $600 or $700 overall on this trade. Absolute banger of a trade. And that's it, guys. It's really that simple. I do videos about this every single day. And you can learn this strategy for free. I'm not asking you for any money. But if you do want to get alerts and signals of my trade specifically, and I did alert a trade just today actually, you can like, subscribe, leave a comment down below, let me know your thoughts. Check back for daily updates, ask me questions, and if you do want to get alerts and signals, you can get them in the description below. Cheers.